We did get some signalling prior to this federal budget that we could expect something a little bit more significant, but this was the biggest tax reform we've seen in decades. The impact of this tax reform really has to shift and change the way we think about how we accumulate wealth and how we want to grow our wealth over time. I think the first thing to remember is not to panic. We have time, and so you really need to consider all of the assets that you hold in different entities and seek specialist advice. But there may be things you can do today, such as get the right valuations at the right dates, and then think through what are the consequences of continuing to hold that at an after-tax level. The existing rules apply until 1 July 2027. So if you had a CGT-free asset, or if you were under the 50% CGT discount after 12 months, they still apply, but come 1 July 2027, the new rules apply regardless. That means that the cost base will be indexed to CPI, and then the gains will be taxed at a minimum of 30% after that point. Firstly, it's important you take the time to discuss things with the right experts, and this may mean considering every asset you hold in every entity and how they interact with each other, and reassessing whether you have your assets in the right structures. Definitely don't panic and seek the right advice as soon as possible from a specialist. There is time for you to start planning, and it's important you do that early. It's also important that you think for the long term so that you can make sure that you're set up for long-term resilience.